and bringing in a new law in the place of old 1961.
What if I told you the tax law that shaped India for 60 years is no longer valid? Yes. The 60-year-old Income Tax Act is gone, and from April 2026, a brand new law will decide how India pays tax. Goodbye confusing assessment year and previous year. Say hello to one simple tax year. Middle class relief up to 12.75 lakh rupees, 100% tax-free. Parents no more TCS on kids, education abroad. Families refunds even after due date. Property owners, finally, simple housing rules. This is not just a reform, this is a tax revolution. And if you earn, spend, or invest, it's going to change your life forever. Stay with me, because in the next few minutes, I'll show you how to turn these rules into massive tax savings. Income Tax Bill, 2025. New law from April 2026. From the 1st of April 2026, tax year 2026 onwards, the old 1961 Act will be scrapped. A brand new income tax law will apply. Simpler law sections reduced 819 to 536. Chapters cut 47 to 23. 39 tables and 40 formulas for easier presentation. Impact. Law becomes shorter, cleaner, easier to understand. No more assessment year or previous year, only tax year. Assessment year and previous year removed. Only tax year concept will remain. Impact. No more dual year confusion. Example. Simply say, tax year 2026, instead of financial year 2026-27, and assessment year 2027-28. New income tax slabs and exemptions. Basic exemption, 12 lakh. Standard deduction, 75,000 rupees. Total tax-free, 12.75 lakh. Slabs percentage, 0 to 4 lakh nil, 4 to 8 lakh 5%, 8 to 12 lakh 10%, 12 to 16 lakh 15%, 16 to 20 lakh 20%, 20 to 24 lakh 25%, above 24 lakh 30%. Impact. Major relief for middle class, progressive and fair taxation. Refunds and compliance made easy. Refunds allowed even after due date. Faceless assessments to no office visits. Prior notice before enforcement action. Nil TDS certificate if no liability. No TCS on education remittances. Impact. Hassle-free filing, faster refunds, more taxpayer-friendly system. Salaries and pensions. 75,000 standard deduction for all salaried. Unified Pension Scheme, UPS. 60% withdrawal tax-free. Transfers to pension pool not taxable. Impact. Extra clarity and benefits for employees and retirees. Investments and search rules. SWF and pension funds exempt for infra investment, 2020 to 2030. Block assessments in searches instead of multiple. Expanded digital search emails, social media cloud can be checked. Impact. Transparency for investors. Businesses must maintain clean digital records. Housing, donations and losses. Municipal tax deductible before 30% house property deduction. Anonymous donations restricted, especially religious trusts. Loss set-off simplified. ITRU update return within 2 years, with 50 to 100% penalty. Impact. Easier for property owners, stricter donation rules, option to fix missed incomes. Quick takeaway from April 2026. New simpler law. Only tax year, no assessment year, or previous year. 12.75 lakh tax-free income. Progressive slabs up to 30%. Refunds allowed after due date. Faceless assessments and nil TDS. Clearer rules for pensions, housing, donations and losses. ITRU for corrections, with penalty. Stronger digital search powers. Finance Act, 2025. Changes under old law from April 2025. These apply from the 1st of April 2025, assessment year 2025-26, under the existing 1961 Income Tax Act. Capital gains. Property, land or building. Long term after 2 years, earlier 3. Securities held by certain investment funds, included in capital asset definition. Impact. Quicker access to long-term capital gains benefits. TCS on foreign remittances. Above 7 lakh, under LRS. 0.5% TCS. Impact. Families sending money abroad, Must plan transfers carefully. Search and seizure rules. Undisclosed income taxed separately as block income. No extra interest or penalty on such income. Impact. Fairer and clearer rules in searches. Assessments and time limits. Reassessment timelines redefined, excluding appeals and rulings. Impact. Department gets structured deadlines. Taxpayers must maintain records. Penalties and compliance. New penalties. Investment funds not filing returns. Transfer pricing non-compliance heavy daily fines. Impact. Strict compliance needed to avoid heavy costs. Faceless regime. Faceless assessments and rectifications continue. Impact. Fully online. Accuracy is critical. Settlement Commission and Tribunal. Settlement Commission curtailed. More reliance on ITAT. Impact. Appeals continue, but limited settlement options. Miscellaneous updates. Tax collection account number 206CA introduced. Special courts procedure clarified. Impact. Important for litigation and technical compliance. Quick takeaway. From April 2025, property LTCG equals 2 years. 0.5% TCS on foreign remittances above 7 lakh. Search income taxed separately, no extra penalty. Reassessment timelines defined. New penalties for funds and TP. Faceless assessments continue. Settlement Commission curtailed. Litigation procedures clarified. To sum it up, India's taxation is entering a new era. From 2025, small tweaks will start. But from April 2026, the game completely changes with a brand new income tax law, Salaried. Enjoy 12.75 lakh rupees tax-free. Parents, send your kids abroad without TCS burden. Property owners? Simpler rules, fewer headaches. And refunds? You can claim them even after due date. This is not just a tax update, it's a tax revolution after 60 years. And those who prepare early will save more, worry less, and stay ahead. My suggestion? Don't wait till 2026. Start planning your income and investments today. And remember, I'll keep bringing you clear, simple updates on how these changes affect your salary, your property, and your business. So hit that subscribe button, share and like this with someone who pays tax, and let's make sure you benefit fully from this revolution, not get caught unprepared.